Hi there, traders, and welcome to Trade the Structure. Now, I'm just going to put together this quick video. Okay, it's about trading at levels and the way I would attack it. Now, I've got this idea. I was just watching a YouTube video, as you do. You scan through a few different ones that pop up, a few recommendations, and I think more often than not, I'm seeing, well, from what I think is the wrong approach to trading the markets, the wrong approach mainly to entries. Okay. And I think there's too much, obviously, everyone's gone through YouTube. There's too much rubbish out there. And if you're adamant on learning from YouTube and learning from those videos, you've got to make sure you understand why their setups may work or why they may not work. And then once you do, if it makes sense to you and you think it's good, then you have to go away and do some back testing. Don't just dive in left, right, and center, because I think there's a lot of people out there spruiking stuff that just, to me, just does not make any sense. And I think this is one that I was actually watching just recently, and I think it's worth talking about. All right, and the way I would just adjust, look, there's nothing too wrong with it, but there's something that I would just adjust slightly, and I think a lot of people should get used to doing and should implement in their own trading, just to refine their interests. And a lot of the time, it will keep you out of trouble. And trade in the right areas at the right times, as opposed to just jumping in, getting stopped out, and then seeing the trade going without you. Okay, so what we're looking at here is the Dow. Okay, and the idea behind this video, is saying there's a sell-off from a certain level, for instance, and then the market spikes up into back up into that level. Okay, you get short because most times it does go down. Okay, but what it comes down to for me, yeah, okay, that makes sense. But how are you going to get short? Okay, that's the big question. I think that's a big mistake that a lot of these guys are making, and a lot of them that are teaching that they're making. And I did see he was giving one example, and if you look back on the chart slightly, it was exactly the same trade. It just didn't follow through. Okay, but he failed to mention that trade. Okay, but I think if you add something to that technique, yeah, it's fine when you come back into a resistance zone or clearly something that you've marked up where, look, I want to take some action there. If you add this little touch or little change, then I think it could really increase that setup and really start to either keep you out of trouble or get you in the right time when things are starting to work out. All right, so let's start off with this first example. Like I said, it's powered up into a resistance zone, previous high, and then their idea is just to get short into that with your stop above. Now, you can see from this example, we're looking at the 30-minute time frame. Okay, so if we're trading from the 30-minute time frame, uh, that's kind of the entry. Okay, you may have got long, might get short just below that level, and then depending on where you got stopped, where you place your stop, you've either been stopped out or you're probably closed out. More than likely, when you see this kind of a spike through, especially this green candle little pop, you're going to bail, okay, because you think, oh, this is not the one that works. Now, I think if you flip it over and just add something slightly different, which I know a lot of the guys I speak to are using it, it can dramatically change your trading or dramatically increase your profitability. Now, there's going to be times when you give up a little bit of profit, and there's going to be times when you can see it go back in your favor and you're not actually in. But that is also part of risk management. Okay, so when you look at this entry on here, you've got short potentially. I would feel. I mean, if you got stopped out there, if you got short somewhere, when it first pushed up to that level, it's rallied another 250 points on that 30-minute chart. If you've got a stop that's over 250 points, one, I think you're crazy. I think you could dramatically improve your odds there. And then secondly, you've got to go for a massive payout, all right, to cover those ones where you actually have those losses, all right. And how far do you put it away? How far do you put it above? Do you have a 300-point stop? Do you have a 400-point stop? I think that's sort of the wrong approach. So what I would do, and what we'll show you in the next couple of examples, is I would just drop the time frame. Simple as that. Okay, I'm trading off the 30. That's where my zones are. I might trade off the 5-minute chart. I'm looking for my entries off the 5-minute chart because you're going to get a lot more detail in those 5-minute charts as opposed to the 30-minute chart. Okay, so you can see this. What's actually happened? The market's pushed up, went through the level, and the market's going to do that time and time again. They're going to go stop hunting. They'll go flush it through the level because they know that people will be selling into that level and just put their stop automatically. They'll go away because they read it in a textbook or they've learned it on a YouTube channel. But that's how they're taught to trade, and then they get stopped out. Okay, look, there might be times when they just miss that stop. They don't get stopped out and it's turned around and gone in their favor. But I think what happens, there's going to be a lot more losses than wins, okay, on that sort of style, because the market will do it. The market's done their due diligence on traders. They know where people would more than likely place their stops, and they go stop hunting. They'll trigger it off, and then it can come screaming back down again. And what they're also doing is triggering some buys above that level, and they turn around and come screaming back down. And all those buys above the level, the breakout traders, are getting stopped out. So what we want to do is really flip it over, and we want to add in one more layer supposedly one more layer on the 5-minute chart. Okay, so we're looking down to the 5-minute chart for our entry, whether it be an RTF, which I'll talk about in a second, or a shoulder. And a shoulder is a lower high in this instance. We're looking for a lower high in the 5-minute chart. So you can see within these 1, 2, 3, it's about 5 to 6 red candles. We could easily on the 5-minute chart get a shoulder to trade into and not risk too much. And if we do get on the shoulder, it starts to, pops back up, comes back down. We jump on the shoulder. We're not risking much at all. As opposed to 260 points, 300 points, you might be risking 40, 50 pips. Okay, 50 points. We're not talking FX. We're talking the Dow. Okay, so you might be risking 50. So you can see that you get stopped out. No big deal. You got 40 or 50 points going off here. If you get stopped out here, in this respect, when you come and just sell into it without the market proving it's right or wrong, you've just lost 250, maybe 300 pips on that trade, 300 points in that trade. Okay, so we'll do that in a minute. What we've got the second trade here is, if you did that way and you happen to have a 300 point stop, like I was saying, and you were kept in the trade, you've been proven right. Okay, so then you go, okay, look, if you didn't get in that trade, I'll do the same thing down here. Good support zone. You can see bounce, 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 good support zone. Okay, so let's just do the same thing. Let's just buy it ahead of the movement where it hasn't proven itself, and we'll have a 300 point stop. And lo and behold, you've just probably get tagged. So if you're down here, it's about 200 to 300 points, or you're held in there, and then you got tagged about here. So, if that's the way you're gonna trade it, great. I think if you can hold it for 300 points, all this gain, that's great. But I don't think it's the world's best way of trading. I think you can dramatically reduce your risk by still going for the same payouts, okay? And it's going to be times like this when you've got a loser when that could have kept you out of the trade. What I'm going to show you on the 5-minute chart, it actually got you in short. It kept you out of the long trade into that level, and it's got you short. When the market's broken, come back and retest it, and then it's gone again. You can see that we've got this green candle back up, retest, and it's sold off again. And instead of losing 300, you could have made 300 or 400 points on that trade on the short side, just by dropping down the time frame, all right? When we look at this trade here, same sort of scenario. Probably not as dramatic as this one up here, the first trade, but you go and sell it. Okay, support now becomes resistance. We've had a good breakthrough. We come back and up and to retest it. And this is what this YouTube channel is saying. It's accelerated up into a level. We want to just get short. You're just whacking your sell with your protected stop above. I mean, where do you get short and where do you have your stop? How far away? It's all subjective. Okay, when the action is going up and you're trying to sell as it's going up, to me, that's a losing trade. It's a losing strategy because you're just trying to me, it's just guessing. Okay, you're going to guess where that high is. You're going to guess how far you have to put your stop above to keep out of trouble. All right, so what you may have done, you may have put it just on this first green candle. It's gone sideways. You're looking okay, then it's flushed out that green candle. You may have had your stop above. You just got stopped out before it dropped and ran in your favor. Okay, and I'll show you again on the 5-minute chart a better way to get into it, just by dropping a time frame, and a better way to either keep out of trouble or just refining that entry to get a better odds, to play the odds better, okay, with minimum risk. You're not risking the 300, you might be risking 50. So let's go over to the 5-minute charts now. Okay, so here you're looking at that first trade, and remembering we had this market pressing up into a clear, I would say, offer zone. Now, if you were trading it and you're getting answered that's going to hold, you might have gone short in here. You might have given it a bit of room, or you might have just shorted it when the market's popped up. That's first sort of acceleration. Okay, we're close enough. Do I sell it 5% below? Do I sell it 2% below? Do I sell it 100 pips? Who knows? I mean, with that strategy, who knows where you sell it? Do you sell it right at the figure? You sell it when it gets up to here, and then you watch it pop up, you get stopped out, and you call it a day, kick the table, kick whatever, kick the dog, the cat, and then watch it come down all the way back down again and prove you right. And then how do you sell it? How do you get back into the market? So there's all these sort of things you've got to question. Now, the way I would attack it, I'll be looking at this. You've got the little pop up through, and there's going to be that scenario where you go, I know we're at a resistance zone, but I really want it to prove itself. I'm going to watch this 5-minute because I've traded it. I've watched it and I've marked it up for my 30-minute chart. I know it's a clear level, but I don't know whether it's going to break through that level, retest, and then keep on kicking higher, or it's going to start to roll over at that level. And now I know they do two things. They flush the market time and time again, meaning they go for the stops above the level. So that anyone that has to buy on stop above the level, either entry or exit, but they're buy on stops, the market's going to try to trigger them. And then it can easily roll back over and fall on its head. Okay, but I know the market loves to do that because I've done my back testing. I've been around the index trading for quite a while, but that's something I'm always looking for. Okay, so that's something I'm very aware of. And the only way for me to get around it is by dropping the time frame. So if we go and look at this now, what we've got here, you can see there's a little RTF, retest fail, I call it. Okay, so the market spiked up, took out the stops, come back down, retest it. So you might have got anyone buy it through here. It's flushed out again. Now, to me, that's not a good enough reason to be buying it. We've got that little flush up here, and then it starts to fail. Okay, so what you can see after this RTF, and you'll see that's a very, very good, especially on the lower time frame charts, remembering this is kind of a failure on the 30-minute chart. It's kind of up and then down on the 30. One candle up, one candle down. Okay, green then red, but on the 5-minute, you've got an RTF or a double top, whatever you want to call it. I call it an RTF, and I'll mark that up, what I'm saying. RTF, okay, retest fail. It stays there. All right, so that's something that I'm looking for time and time again, especially on the lower time frame. So what you can see, once we got that, all I'm looking for is a basic shoulder. And if I go and box it up to something that I would trade, I'd look to trade potentially, not so much in here, but you can see the couple of green candles here. I like that kind of a trade, okay? Box it up. I trade the short side when it breaks down through the low, and my stop is just above, because what I'm seeing there is that RTF plus the market starting to fade back below that 30-minute resistance zone, okay? And that's ideal. You could have got in maybe a few other little short entry, maybe short entry in there. But you can see that once the market starts to move back down below, it starts to get a clearer direction on the 5-minute chart, and you get multiple entry opportunities on the 30-minute chart. I'm sorry, on the 5-minute chart. So by looking at the 30, waiting for it to do its thing to prove itself, whether it's going to go up or down, and then trading accordingly on the lower time frame charts, you can see that dramatically improves your risk. So the risk on this one here was, say, 55 or so to 60 pips, 60 points, as opposed to a 300-point stop. So even if you got stopped out there and it continued higher, then you could probably flip it over, go long, okay, when you get a high-low play out, all right? But you can see how it helps you dramatically increase the odds of success or keep you out of those trades that are going to smash you, okay? And really, you can go for exactly the same payout. All the way down here, it doesn't hold up. You've got it all the way down here, and potentially you're risking 60 and you've got a 600 points. So that's 10 to 1, all right? So really, really good style. I think good style to trade. And if you could hold through that, you've got it all the way back down to this resistance or support zone. So that second area, what I was saying, if you just went and put in a bid here, you've either got set when you're relatively close, it's starting to lift off there, you think that's the one, or you've got set just when it's traded into that level, and then you can see you've easily, simply got stopped out of that trade, okay? Now, if you were watching on the 5-minute time frame, there's no higher low to jump in, nothing through here, nothing through here. You've got this sort of pop up here, and you go, okay, maybe in here, all right, you might have grabbed a long with that breakthrough there. Yeah, no, maybe. Okay, I would like a deeper push through, and I'd ideally, looking for me personally, what I'd like to see if I want to go long, I want to see the push through and it finish above. Then I'm looking for a higher low above the market. Okay, I'm looking for this kind of thing. That to box it up and trade off the level as opposed to something below. So I wouldn't probably have gone short there. Wouldn't have gone long there, but what you can actually do, if you box it up, you flip it over, you could have actually gone short. It starts to fail off there. Even if you're waiting for failure, you're waiting for it to get through that low, you've got all this area you could have traded. You've got all this area you could have traded. You've got all this area you could have traded short. Okay, and look what happened. The market's still gone down, and you probably could have got, look, it's not as good as the first trade, but even if you've got that first one, probably before you traded wrong, you've got 300 to 380. So as opposed to losing 300, you could have made 200 to 300 points, conservatively. Even if you've gone off this second trade, whoop, that's not what I wanted. Measuring it there. If you've gone off this second trade, you've got a, 170, and your risk really is around 100 on that area there. You're risking probably very similar, 140. You probably could have brought that down a bit, So you can see that by utilizing those lower time frame charts, you're dramatically reducing your risk for any one trade. Now we'll just finish off in the last trade. Now, if you don't want to be selling into the zone, okay? So you've got potentially set anywhere in here, okay? And if you've got your stop just above that high, you saw all this and you've dropped your stop above the high, you think this is going to hold, the market's turned around, flushed you out with this kind of move, a few flushes through that level, probably going to get you out. You may have taken a smaller loss on this one, but you can see there was really no reason for me. It would have been no reason to get in there, okay? I wouldn't have got in through here. You get this retest. What I'm looking for is that shoulder. Yeah, could have been something maybe in here, but then I was stopped out anyway, and I'm not risking too much. Maybe nothing really in here. You can see that market starting to hold higher lows, so I probably wouldn't have been short in there. But what you see is getting this major, essentially a double top up here, a retest failure again, failing off here, and then you've got this beautiful little shoulder to get short into, especially after that double top or retest failure. Okay, and what you can see is that market really started to sink. So if you could hold it through this sort of chop through here and held it all the way down, you've got more opportunities to retest fail here, and you could have gone short on a 3-candle setup. Refer to the videos on the YouTube channel for the 3-candle setup, but that was a nice little 3-candle setup off the retest failure there. Okay, so you can see with just by altering that minor detail, you've got a much better odds of success. And if you're not going to get it right, like I said, you got chopped out here. If I did get short here for whatever reason, through that, push through the low, that's what I'm looking for, then I haven't got stopped out. If I was looking for something a little more conservative, maybe a bigger stop, I didn't get stopped out. I didn't even get into the trade there, okay? But you can see if I did happen to get into that trade with the push through there, for instance, off that minor lower high on the 5-minute chart, then, okay, I haven't taken too much of a hit. And the risk on that one was somewhere around 55, for instance. And if I took this one here, it was around, say, 65. Okay, so if I was willing to 65 there, I've lost 55, but this payout here, if I kept holding it all the way down, you can see 500 points quite easily. Okay, even if it was just down here, you've got a bit of retracement, 80 pips or so, and I've made back my loss there, and I could have re-entered through here, Okay, so what you're doing, you're not trying to go for those really big trades. You're just trying to take out the bigger chunks of the trade without risking too much into the market. Okay, and you can see by just dropping it down that time frame simply and try to trade off key levels and wait for your setup where I love the RTFs and I love the shoulders. If it's an RTF shoulder like this one and this one, that's a shoulder and an RTF, chuck them together, that's a prime setup to go short, okay? And if you flip it over to go long, all right? So you can see by just doing that one key thing, by dropping it down to the 5-minute or a lower time frame, if you're trading off a daily, you might drop it to the hourly. If you're trading off a 5-minute, you might drop it to the 1-minute chart, okay? Just by doing that to utilize your entries or to look for your entries, I think it's a much better odds of success, okay? Success, I'll spit that out. All right, so that's all I wanted to discuss. So what it is, I guess, be wary of what you're seeing online, and if it makes sense to you, fine. Make sure you back test it, okay? Do your due diligence on it to make sure that it does work more often than not. I mean, if you're willing to risk just if we go back to the 30, you're willing to happen to buy in that, or you're selling in that, or you're selling into that resistance zone because you've done the back testing and it actually works, fine. Okay, that's great. But I would hesitate to say use the other, use a 5-minute chart to refine it, because there will be times if it's a 50-50 setup and your payout's 2 or 3 to 1, that's a winning strategy. But if you can drop it down a time frame and it's still 50-50, but all of a sudden it's 10 to 1 or 15 to 1, that's a much better trading system than just trading from that one chart, okay, just by simply dropping it down a chart, a time frame. All right, so that's all I want to discuss. I hope you enjoyed that. It's gone a bit longer than what I thought, but yeah, it'd be great if you could subscribe to the channel if you like what you hear. There's going to be more free stuff on the channel. Look at www.tradethestructure.com and subscribe for free. There's a lot more material on there, and I'll be continuing to pump out these videos of things that I think are worthwhile, okay? Worthwhile, it's going to help with your trading. Because I know it's helped me the way I got taught, and I think if you stick to a few key rules when you're trading and looking for a few key things, then I think it's going to help you as well. All right, so thanks for joining me, guys, and we'll speak to you soon.